The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after the Guy Benson show at 3 and just before the 790 KBC News Blitz with my pal Randy Wang. Motec on Money, live on the air on 790 KBC, streaming live online worldwide, KBC.com. And, of course, the on-demand Motec on Money podcast, KBC.com, Apple iTunes, YouTube, all your favorite podcast platforms. Positive start to the holiday-shortened week on Wall Street, coming off the 3-day President's Day holiday weekend. The Nasdaq, leading the early losses, was down more than 1% early on before turning around a bit. All three of the major averages closed modestly higher, extending a volatile stretch today. Concerns over AI's long-term disruptive potential pushed the indexes lower last week, with the Nasdaq racking up its fifth straight week of declines. We are keeping an eye on the AI stocks as well as the software names. It looks like as AI spending surges, a record share of fund managers think companies are over-investing, according to a new Bank of America survey out today. We did see some of the big names like General Mills moving lower today, down 7%. That company cut its annual outlook. And it looks like we're keeping an eye on the earnings parade. We'll have more on that coming up here shortly. The week's holiday-shortened economic reports include a first read on economic expansion for October through December, which will be coming out on Friday. We did see the dollar firm a bit, strengthening especially against the British pound today. The S&P 500 finishing only about, just shy of 2% off its record high close, which we saw in late January, getting a boost today from a bounce in some of the tech names. The Dow coming in for a closing gain today of 32 points, the S&P 500 of 7, and the Nasdaq gained 32 points. Price of oil back in focus today, with the price right now down 7 cents at $62.26 a barrel. Brent crude futures sliding to $67.64 a barrel. Oil prices pulling back on the latest news of diplomatic talks between the U.S. and Iran in Geneva over the Iranian government's nuclear energy program. The Wall Street Journal reports that Iranian delegates floated the possibility of pausing Iran's enrichment of uranium, but looks like tensions are still running high, with Iran's supreme leader threatening to sink U.S. aircraft carriers sent to the Middle East as the nuclear talks continue. I'll discuss the very latest on the Middle East, the impact of the price of oil and gas prices here in California as well, spiking due to the closing of refineries. We'll talk about it. We'll talk about it with prominent oil analyst John Kilduff, at Again Capital and CNBC contributor, who'll be joining us live later this hour. We'll also be speaking to prominent economist Ken Klowden, fellow at the Milken Institute, coming up later this hour. After rallying early this year, it seems gold and silver losing some of their shine now, with gold slipping below $5,000 today and silver at the moment hovering at around $73 an ounce, both well off their record highs. Bitcoin under pressure again today, extending a 4-week slide in a very volatile crypto market. We see a Bitcoin at the moment at around $67,400. Big news in Hollywood, with Warner Brothers agreeing to reopen talks with Paramount Skydance about a possible merger deals after they signaled it was ready to raise its price on top of several other deal sweeteners put forth last week. That is Paramount Skydance ready to raise its price. We did see the names involved in that potential merger deal moving higher. Warner Brothers moving up 76 cents at 28 and change. Paramount Skydance moving up 51 cents at 10.83, and Netflix shares of 13 cents at $77 a share. Joining us live now for Your Money, the markets, and the economy. Joining us live is the top-ranked money manager, Ken Winans, at WinansInvestments.com. Ken Winans, also a market historian, author of numerous books, including Investment Atlas 1, 2, and 3, also Forbes magazine contributor. He's also host of Winning with Winans podcasts and on the air in Las Vegas, and the Wealth Minute features here on 790 KBC. Ken Winans, thank you very much for taking the call here today.
Frank, my pleasure. And, there's actually a lot of interesting pieces in the news that are not making the news. And one thing that I would say, and I think everybody here, certainly who live in California, pay California taxes, but one of the things that has to be considered that the folks in Sacramento must be getting a tad nervous because the projections they had on tax revenues coming off the Magnificent Seven stocks, with many of them based in Silicon Valley and Greater California, and certainly, as we know, Netflix is certainly based in California as well. I mean, you look at some of these numbers, Amazon is obviously up north, but down 13%, Netflix down 18%, IBM down 13%, Google down 4%. I mean, you're not going to get a lot of tax revenues off capital appreciation this year. And that, for anybody who are municipal bond holders in California, I think you better go have a talk with your advisors.
They're live with Ken Winans, and the other thing happening here in California, we're going to be talking more about it with John Kilduff, the oil analyst. What's going on with the closing of one major refinery and soon to be another one here, and oil coming to us through the Bahamas, through the Panama Canal now, and all kinds of crazy things happening with the oil and gas market here in California. Of course, we're watching what's happening in the Middle East as well, and we'll be talking more about that later this hour with something big potentially happening at any moment. What's your thought on where gas and oil prices go from here and all this?
Well, what's interesting is, I mean, it's fun to watch that crude oil did have a move off of its low. I mean, it's still, basically, oil prices are still really not much of a talk outside of California, Frank, to be perfectly honest. I mean, I live in Las Vegas now, and where you're comfortably finding oil, even near the Strip, even near the freeways, gas is noticeably cheaper than what you folks are paying in California. But, today's move, and I think, again, looking at a year that is almost like it's a series of boomerangs hitting people. I don't think anybody honestly thought that the Dow Industrial Average, the Dow is beating the S&P 500 by a pretty comfortable margin, that the New York Stock Exchange Composite, which we rarely talk about, but has been around forever, it's up 6% on the year, and the NASDAQ's down 3%. I mean, bonds are doing better than the NASDAQ. I mean, the Dow Jones bond average is up about 2%. So you're having a lot of very interesting movements in the economy. And again, when you look at it, even just from an industry standpoint, I mean, I'm just talking about just simple the ETFs that have been around for a very long time. I mean, you would just never in your wildest imagination would think that the ProShare Tech ETF is down 5% and home builders are up 17%. I mean, that's, and for that matter, energy's up 19%. So again, it is, this market is going to require people to do some very different thinking that they've had for the last 2 or 3 years about AI stocks, Magnificent Seven stocks. You're really going to have to roll up your sleeves and think about some other groups if you plan to have a good year this year.
And what about crypto? If you can put your crypto hat on for just a moment here, Ken, really wild moves in Bitcoin and the other cryptos, mostly on the downside in a dramatic way here now. We see Bitcoin again in the 60s here at 67,400 or so. Ethereum is just below 2,000. Doge at 10 cents. Your thoughts on what's happening in crypto land here?
Well, let me answer it this way, because I think you have to look at crypto and you have to look at the precious metals and the dollar altogether. I mean, I know that a lot of competing media sources are making it sound like the dollar is back at levels we saw back in the Civil War. Simply not true. The dollar's actually found a very nice, stable base in this area that has been going on for really since June, and before then, even just a few years back. So the dollar's stabilizing. Crypto, both Ether and Bitcoin, they're trying to stabilize. They're trying to find a bottom. Clearly, there's some buyers come in, and I think I brought it up last week that I felt that at this range, you were going to find a few people wanting to nibble at crypto. At the same time, we had a dead cat bounce in silver, gold, platinum, and palladium that now there's some people who made some short-term profits. They're taking it off the table. But I think, again, you're having basing in the cryptos. You're having some equilibrium re-entering the precious metals market, and the dollar stable. I think that is a general positive as we look forward going from here. But again, I think for people who had made commitments to crypto, you've had it pull back. You kept saying, I want to wait for a pullback. Well, guess what? You've had your pullback. Now you got to decide if you want to step in.
All right, it looks like the diehard crypto fans are doing just that. Famously, Michael Saylor with his strategy stock buying the dip, and what a dip it is, and sitting on tremendous unrealized losses. And similarly, Thomas Lee with the Bitmine immersion stock, which is focused on Ethereum, also sitting on tremendous unrealized losses. If you were advising them, Ken Winans, what would you tell them?
Well, the one thing is I'm not a perma bull or a perma bear. And I think, again, there's a lot of people who can talk themselves into trying to, what we used to call catch a falling knife, and keep saying, well, it's cheaper today than it was yesterday. Well, that's true, but it's going to be cheaper tomorrow. You got to be a little careful. I would just simply say, if you haven't learned it already, you should learn. Crypto is very volatile. And until you have really concrete regulatory picture, we have a better sense of what's going on with stable coins. I actually think that a very big part of this, I'm going to go back to, many people might not know this, but Tether still is not applying with GAAP accounting standards in the United States. I think you've got to start playing ball, and you've got to play ball with what some of the regulators actually want to see in order for this to move forward. And I think we'll have that this year. That was a big promise made by President Trump's administration, that we will have crypto be part of it. One other quick thing, I think it's going to be interesting to see when there's a change at Fed leadership. Is crypto going to be added to the list of things that the Federal Reserve can actually get involved in? I think that's a game changer as well, but we'll have to see.
All right. What about the crypto-related stocks? Coinbase, which took a big hit recently, up slightly today, and the list goes on.
Well, here's the thing. It was interesting because, I still like Coinbase from the standpoint, if you are a crypto person but don't know quite which coin to buy, for lack of a better term, Coinbase is great because you're in exchange for all of them. And I do think that if any of the more conventional banks and investment firms are going to start offering crypto savings accounts, they would go through a company like Coinbase to offer that, because for them to set that up in-house and take the regulatory heat on it, I think is too much. But again, you're looking at Coinbase is down, 27% this year. Clearly it was up 1% today. There are some people nibbling at it. But again, the crypto stocks are going to have the same problem as crypto. They're very volatile. They're what we call high beta stocks. And I do find it pretty comical that the S&P 500 just added Coinbase to the average pretty much when the stock was at its high. So I don't think you want to use the governing body of the S&P 500 for your stock tips. But again, it's going to take time for this to all work out, Frank. And I think people need to look at it in a very broad context. I certainly have no problem with it in the long term. But again, it's the volatility that scares most people. And I think, again, you got to be a little careful if you step in on it.
Are you doing any bottom fishing among the hard-hit software names or even in the Mag 7 group? Looks like there was somewhat of a rebound today, even with Amazon, which I believe is in the bear market territory, right? We got Apple rebounding more than 8 today at 263 and change, and NVIDIA more than 2, back to just shy of 185.
Well, it's interesting. There's two tech worlds right now from a stock standpoint. There are those techs that had just gotten mauled, they got beaten up, and of course, they lost a lot of their shine. And then there's other techs that many people might not even have ever heard of. A stock like Amphenol that basically makes cables for computers. That's a long-time company, been around forever. It's up 10% on the year, and it's up 114% since the beginning of last year. So you can still find companies that held on to their gains. Here's the thing, Frank. Clearly, the thing that we all knew through earnings season is that the multiples were unbelievably high on the Mag 7 and on the AI names. They had to have earnings support those valuations. Well, the market has spoke up and said, well, you didn't do what you're supposed to do, and you got hit very hard. I would just suggest that there are names in tech that are some interesting names. Interdigital, PAL Industries, which is more of an electronics company. I'm finding some names that are just not celebrity CEO types that I'm more inclined to buy right now. But again, there are a lot of companies that are doing very, very well right now. I mean, who would have ever guessed that here you're looking at stocks like Walmart, even though we're down today, up 16% on the year. Again, these interesting parallel universes in stock investing where you have Walmart beating the Magnificent Seven. That doesn't happen all the time.
All right, and then the wild moves in the precious metals, Ken. We got gold back below 5,000. Are you doing any quote-unquote bargain hunting there with gold back below 5,000, silver at around $73 an ounce?
Absolutely, and this is my thought. I mean, I look at it both from a stock standpoint and also from a commodity standpoint. You know, gold is really trying to find its bottom, and I think that between 5,000 and really about 4,800, that's where we technicians would look for support for it. But I still think the long-term trends are intact. You're just dealing with short-term sell-off. I tell you what, I like gold better than I do. In the case of silver, silver has such a blow-off of its top. I know it's tempting. People say it's going to go right back. I think the trends in silver will continue to go up. But quite frankly, you know, if I was to look at just a fundamental name, we know there's been a lot of movement back towards or away from EVs, back towards combustion engines. And if you're looking at that and you're looking at a metal play, you got to look at palladium, because catalytic converters, that's the metal that they have in them to clean the air. I think that story on just a story basis alone means that it can go a lot higher than we've seen in recent times. But Frank, here's the thing. We're 6 weeks into the year. I know that there's people who are hoping that the stocks that were moving the market last year, and certainly when I say stocks, also talking about really anything, bonds, commodities, you got to go with the phrase trend is your friend. And you got to look at the trend this year. And I just think, again, you have a chance to have a good year, but you're going to have to make some changes in your portfolio. And I just find that, amazingly, a lot of investors won't do that. And I think it's a dreadful mistake.
All right, looking at palladium now, it also has pulled back recently, although a bit of a bounce back today at $1,706.50, up about $26. And platinum right now at $2,026 and change. At this point, Ken Winans, let me ask you the big question here. Any specific places where you are putting money now and or taking it off the table?
Well, I'm 100% I have been for a while, but I'm moving towards being 100% fully invested across the board. And, you know, the names that I've been buying really were kind of interesting. They're not things that you hear about. And I've heard from many of your listeners, Frank, that they do like that I pick these kind of odd names that no one's ever heard of. But I'm going to go back to what I said. I've been saying it for a while. I think people need to look at buying these stocks in a pullback. They are the construction stocks, not necessarily the home builders. Some of them are the big construction guys. When you are looking at, construction cranes as you're going up and down the freeways, when you're looking at anything, and one that's catching my eye right now is Granite Construction, symbol GVA. It came through earnings season in one piece, looking really good. Again, it's a little steep. It's a little bit off its moving averages, but I think there's just one name right there. And I'm going to throw this out there. You talk about the metals. The metal that is doing the best this year so far is steel. Take a good look. I've had it as a recommendation before on Motec on Money. Look at Carpenter Technologies, CRS, longtime steel company. It's something that's moving around well. I just think, again, this is where we're going on redeveloping things. I think you have to look at it. And then look, as a fun name, if anybody's looked at the U.S. Olympic team uniforms, they're made by Ralph Lauren, symbol RL. Stock actually is up 5% on the year. It's done very well. It's one of the few staples I like. Go take it RL and help support our Olympic team.
USA. Sounds great, Ken. Well, thank you very much for taking the call here this afternoon. It's always great to have you on the show and appreciate it very, very much. That is the one and only Ken Winans, top-ranked money manager Ken Winans, President and Chief Investment Officer at Winans Investments at winansinvestments.com. His books include Investment Atlas 1, 2, and 3, also Forbes magazine contributor. And be sure to catch him in Las Vegas on Winning with Winans, as well as right here on 790 KBC on the Wealth Minute Features. Ken, thank you very much for joining us live this afternoon.
My pleasure, Frank. Take care.
Thanks very much.
You didn't start a business just to keep the lights on. You're here to sell more today than yesterday. You're here to win. Lucky for you, Shopify built the best converting checkout on the planet. Like the just one tapping, ridiculously fast acting, sky-high sales stacking, champion of checkouts. That's the good stuff right there. So if your business is in it to win it, win with Shopify. Start your free trial today at shopify.com/win.
The UCLA women's basketball season is one you don't want to miss. Your top 10 Bruins are well on their way to another Final Four run. We need you to get to Pauley to support this incredible team. Led by Lauren Betts, Gabriella Jaquez, and Kiki Rice, newcomers Gianna Neepkins and Charlize Ledger-Walker. This group plays an exciting brand of basketball and wins. The time is now to come to see these stars in action. Big-time matchups are coming. Go to UCLABruins.com/tickets to secure your seats today. Can't wait to see you in Westwood cheering on the Bruins.
The CJ Pearson Show.
Every week, we'll take on the biggest cultural, political, and moral battles in America head on.
CJ presents the most passionate voices in the Black community.
When you're going around and talking to people in actual communities, you get to know what people actually care about.
As a Black man, why can't I be the first one in my family to graduate from college? Why can't it be me? Shift the way that I think about the world.
Bold truth, real conviction, zero permission. This is the CJ Pearson Show.
The CJ Pearson Show. Follow and listen on your favorite platform.
Go Money continues, 790 KBC. A positive start to the holiday shortened week on Wall Street. Sure feels like a Monday, but it is Tuesday today, coming off the three-day holiday weekend. The Dow positive at the close by 32 points in a seesaw session, settling at 49,533. The S&P 500 of 7 at 6,843. The NASDAQ of 32 at 22,578. The yield in the 10-year note, by the way, is back down to 4.07%. Looks like mortgage rates are near three-year lows. Price of gold bouncing around today, right now hovering at around 4,890 and change. Silver back to 73 and change. Crude oil at 62.26 a barrel in New York. Bitcoin mostly lower today, right now hovering at around 67,400. ETH just below 2K, and Doge at 10 cents. Motec on Money continues, 790 KBC. Good afternoon. Getting the latest readings on the economy recently on inflation and jobs. Fed Chairman Jerome Powell, whose days are numbered at the Fed, facing what some are calling a puzzlement of economic reports, with contradictions likely to freeze any immediate action on interest rates set by the Federal Reserve, the short-term Fed funds rates. Also concerns around AI, no longer limited to potential overspending on AI from a small group of high-flying tech companies, which have been in the spotlight lately, along with the software companies. Lots of angst around AI threatening to make whole industries obsolete and risking white-collar jobs in the process. Keeping track of all of this and everything else on the local economy here with the firestorm recovery continuing. Joining us live now is prominent Los Angeles area-based economist Kevin Klowden, fellow at the Milken Institute in Santa Monica. Kevin Klowden, thank you very much for taking the call here this afternoon.
Well, my pleasure, Frank. It's indeed, this is a rather auspicious day time today and tomorrow. We've got a whole bunch of things going on, including Chinese New Year, beginning of Ramadan, beginning of Lent, and your birthday. So happy birthday, Frank.
Thank you very much for that, and happy Year of the Horse while we're at it, with the Lunar New Year starting as well. Well, thank you very much for taking the call, and it's always great to have you with us here, Kevin Klowden. And take it from the top. Give us your thoughts here with the blizzard of news coming through. How would you synthesize the latest news on the economy, first of all?
Well, yeah, I don't disagree with Jerome Powell. I think that he's dealing with the fact that the data is a bit all over the place. I think part of it also is that the job data, we talk about that the numbers were better than expected, but it was also accompanied with a revision downward over much of the last year in terms of the job creation numbers. So it's hard to tell at this point, were these numbers, essentially raised by lowering other ones? Is this a sign that things are stabilizing and there's a bit better economic activity? It's really hard to tell. And some of that comes down to the fact that we've had some lack of transparency coming from both the Departments of Labor and the Commerce Department and various other departments. So a lot of the indicators that we would use don't translate nearly as well. And for the Fed, where inflation cooling down is one of their biggest metrics, that's actually a good thing that it keeps the Fed from raising rates. But the jobs number kind of took away the pressure to lower rates, certainly for the moment.
All right, and looks like Kevin Warsh, President Trump's selection to replace the current Fed chair, Jerome Powell, is going to have to go through the Senate process and all of that. And what are your impressions of Kevin Warsh possibly coming in to replace Jerome Powell?
Well, he's an experienced hand. He's been on the Fed Board of Governors before. He has a lot of relevant experience in the markets. When he was announced, really reacted favorably. So all of those come across as solid indicators. The fact that he's going to be a bit more dovish on interest rates is something that I think a number of people would like, and others might be more skeptical about, but generally he's been received well. And if he does use the resources of the Fed, including all of their analysis and all of their tools at his disposal, then there seems to be a certain amount of confidence that he will maintain a bit more autonomy than possibly other suggested picks might have, or certainly be more respected in his opinions by the market.
Certainly, AI evolving very, very quickly, and you got a big job there assessing its impact on the economy, especially on the job front. Where do we stand at the moment with so much attention focused on AI and jobs at the moment?
Well, we have to sort of decouple what's going on in terms of where AI is eliminating jobs in the long term and where people are claiming that AI is eliminating jobs in the near term. Because most of the job losses that have been sort of suggested to be on AI seem not to be driven by AI actually replacing workers, but instead by a number of companies openly prioritizing investments in either hardware, AI architecture, purchase of services, because they feel like they either need to or because it's part of their strategy. Very clearly, we saw that with Oracle. We've seen that with Amazon. Amazon openly stated that they are putting what is viewed as just an absolutely massive commitment of capital to expanding cloud services and capacity based around the needs of AI. And that shift of capital towards these hardware expenditures seems to be driving a lot more of the hiring freezes and job losses than AI actually replacing people so far. Whether or not that shifts as AI's capacity and ability increases, we will certainly see. But in the near term, it seems to be much more about a shift in spending.
All right, let's focus on, of course, you've been very much involved with all the business groups here and assessing the impact of the horrific firestorms which ravaged the Palisades, Malibu, and in the San Gabriel Valley, the Altadena area. What is your latest assessment here of the recovery effort now that President Trump has put in some more federal firepower here with the EPA head now leading a new effort?
Well, that's very much a positive thing to have the federal government be encouraging and trying to facilitate this. I think that everybody, both in the local communities and even the business community, have wanted to see more federal support, more federal funding, more federal involvement. So if that translates into on-the-ground results, that's a positive for pretty much everybody. The question right now is that it's still relatively early after that announcement in action. So it's a little hard to measure that many results, but it's clear that there's a bit more confidence. Also, interestingly enough, even though there has been obviously some pushback against City Hall regarding the report on the fires and everything like that, it is worth noting that Rick Caruso, who's really championed a lot of the recovery efforts, chose not to run for mayor. So one can hope that that means that he'll be continued to be committed to recovery efforts in a number of different ways, but also that he's not may or may not be viewing the fire recovery stall as much of a political issue as it might have been a few months ago.
Right. He's been leading the Steadfast LA efforts, and he's been keeping us well informed on this program as well. Big events coming up here in Los Angeles in the face of this ongoing recovery. And I see Mayor Bass has called for the resignation of the head of the LA Olympic Organizing Committee. What's your reaction to that and the potential impact of that?
Well, the timing is definitely tough because not only does LA have some significant milestones to hit coming up immediately in regards to the World Cup, but hitting infrastructure milestones well in advance is really important so that LA doesn't wind up in the same situation as a bunch of other Olympic cities, which is building up massive deficits, spending a whole bunch of money to play catch up much closer to the Olympics. So the situation with Casey Wasserman is definitely an issue, especially given the fact that he had returned back into a prominent role after being involved in the bid, in part because of his ability to smooth things out with Washington. Now, he has announced publicly that he's going to sell his agency. So the question then comes, does this mean that he has more time to devote to this effort? Or is it possible that he will now have more focus on his Olympic role? And that is yet to play out.
Economist Kevin Klowden, fellow at the Milken Institute in Santa Monica. Kevin Klowden, thank you very much for taking the call live with us here this afternoon.
My pleasure, Frank, and best to everyone.
Thank you very, very much.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rockin'.
It's the biggest game on the planet, and nobody breaks it down like Jim Rome.
Super Bowl run. Who do you think will be the last one standing this year?
Fearless debate and the best callers in sports.
I don't care what you say, defense wins Super Bowl.
That defense absolutely is Super Bowl caliber. The quarterbacking sure as hell wasn't.
He's the Spitfire of sports smack.
A lot to get to, and I'm not sure you're going to like all of it. Honestly, I don't even care if you like all of it or not. I have a job to do.
The Jim Rome Show.
Get up in here.
Follow and listen on your favorite platform.
Moteca Money continues here, 790 KABC. Gas prices up here in California. Oil prices, well, they've been bouncing around in the face of uncertainty about the next move in the Middle East. The price of oil today pulling back as high-level talks between the U.S. and Iran offset a temporary closure of the Strait of Hormuz. Oil prices pulling back today, apparently due to the latest diplomatic talks between the U.S. and Iran in Geneva over Iran's nuclear energy program. The Wall Street Journal reports that Iranian delegates floated the possibility of pausing Iran's enrichment of uranium as a U.S. Navy Armada continues to move into that area. Meanwhile, Iran's supreme leader has threatened to sink U.S. aircraft carriers sent to the Middle East as the nuclear talks continue. We're also watching what's happening with the refinery situation here in California. Not good, with gas prices surging recently as California's supply is constrained due to recent reductions in refining capacity. Following the closure of a major refinery, we've seen gas prices here in the Los Angeles area, for example, move up about 40 cents a gallon just over the last month. $4.62 now, the average price for regular. And in case you hadn't noticed, $5 now, the average price for premium. $5.07, the average price for diesel. Joining us live now, prominent energy analyst, oil analyst John Kilduff at Again Capital, also CNBC contributor. John, thank you very much for jumping on the line with us here this afternoon.
Oh, great to be with you, Frank. And first order of business, though, is that I do have to wish you a very happy birthday, my friend.
Thank you. Thank you very much, John. You're very kind. And it is, I think, National Kindness Day, too. So right in keeping with the theme, you're terrific. Thank you very much, John. And first, give us your reaction now to the latest epic developments in the Middle East with the U.S. military buildup there, these talks in Geneva, and yes, indeed, the closure of the Strait of Hormuz, at least for a time today.
Yes, Frank, and that was a scary headline. That's what this market's been dealing with now for the past several weeks. The Iranians, as you and I have talked about over the years, if they're good at one thing, they're good at rhetoric. They're good at hyperbole and making things up and not really being real. But the market has to take them at their word to a degree, even though most of this is just fluff. Today, the Iranians engaged in a live fire exercise in the Strait of Hormuz. and they did declare some of their own territorial waters, which is just off their shore, to be closed for a while. But of course, the headline on the terminals around the trading desks was Strait of Hormuz partially closed by Iran. Prices spiked up at least about over $1 a barrel right away on that news. So, but it was a false flag, and what came out later was that the Iranians are claiming that there's a deal reached, at least in some principle. We're waiting for the administration to confirm that or not. But for now, it looks like the talks are going well. I think the Iranians are seeing the handwriting on the wall, though, Frank. There's now going to be two. We went from 0 to now 2 carrier strike groups in and around the Persian Gulf. And that'll be in place today. That there's a massive buildup. I can tell you, we watch all these things during these times. Massive buildup of armament on the U.S. side here ahead of what might happen. It looks to me like something is going to happen, but with the Iranians and these folks, you never know. They can always find an off ramp at the last minute. So that's why you have oil prices hanging around the $62 a barrel mark. Let's call it. But things are primed to go down hard, Frank, if we can just get past this latest geopolitical episode, back down to the low 50s quickly.
All right. In the face of all this, gas prices here in Los Angeles spiking big time because of the unique refinery situation here in California due to government policies and oil companies throwing in the towel in the face of all this. And speaking of headlines, John Kilduff, you might have seen the headline in the New York Post over the weekend, which says desperate California shipping oil from the Bahamas now using bizarre loophole as state grapples with highest U.S. gas prices. What is your reaction to what's happening here in California?
Yeah, that's we've talked about this, Frank, about what's coming your way in terms of just the inability to get supply there. It's going to be hard. What that article was referring to is something called the Jones Act here in the United States, whereas if you pick up product from a U.S. port, it's got to be carried by a U.S. flagged vessel. So what they do is they go to the Bahamas, offload the oil or the gasoline in this case, and then reload it back onto a ship and come on back through the Panama Canal and come out your way. You're also going to have to get barrels from China and Asia and other places. This is what I've been talking about. I can only hope that for your sake that this will wake up the politicians out your way who will take a step back from really their anti-refinery, anti-oil and gas industry work. And realize that this is a meat and potatoes issue. I mean, this isn't some luxury, particularly out there in California. You guys don't have the miracle subway that we have here in New York and the great trains and the buses even. Out there, I know you all have to drive. And I think that's lost. And this is a very regressive tax effectively on working class people when they're paying $4 and $5 a gallon for gasoline. It's horrendous and needs to be fixed. And it can be, and there's steps that need to be taken. We've already talked about that there are steps afoot to maybe get a pipeline or two reversed from the Gulf out your way to get you more supply. But all this is going to take time, Frank, and there's going to be pain at the pump in the meantime.
See you tonight. Read about it tomorrow. But hear it now on Motec on Money, live on the air with John Kilduff, oil analyst at Again Capital and CNBC contributor. We're looking at the average price, according to AAA's daily survey, nationally $2.92 is the average price for regular gas in the United States. Here in Los Angeles, $4.62 a gallon is the average price. How much higher are we going to go here, John, in the Los Angeles area?
I think your average price will probably tip near $5 a gallon, Frank. We're not out of the woods on the Iranian situation. You haven't priced in all the gains we've seen in crude oil prices, which is the input to make gasoline from just last month. We were at 52, now we're at 62 to 65. So that's a $10 increase. If anything happens, if there was a real sort of potential partial closure of the Strait of Hormuz today, if those of us in the market didn't know better about what was really going on, you'd see $80 crude, $85 crude in a heartbeat. That's what's waiting, at least for a time. We are going to go into we're also going to go into a seasonal refinery maintenance period. And other factors are arguing for lower prices, Frank, but we've got to get through the Iran situation. And your own problem isn't that you're not going to see the kind of relief we're seeing in the rest of the country really ever.
Such fast-moving developments. What about Venezuela in all of this? Are we going to get oil from Venezuela or more of it?
Oh, we are, Frank. We're seeing Chevron really ramp up and put more money and people on the ground. They are taking full advantage of this. We are seeing Venezuelan output. It looks like it'll be up to about 1 million barrels per day of output, several 100,000 barrels a day of exports to the U.S., to Chevron. It's also being sent elsewhere. But yes, we talked about this. All the naysayers about going in there and getting that industry straightened out, I believe are going to be proven wrong. I think it's pipes, it's hard work that Exxon and Chevron and all these other companies do all the time. Some of the biggest traders are involved in there, companies you've probably never heard of, like Trafigura and others. So the wheels are being greased. That could be a quick resumption of a good significant amount of oil that'll help keep oil prices in check.
All right. From an investment standpoint, where would you be placing your bets at the moment?
I'm going to still stick with ExxonMobil, Frank. We talked about it. It continues to perform well, hit all-time highs last couple of weeks here. And also, too, I noticed that Warren Buffett and his portfolio at Berkshire Hathaway added to Chevron in their holdings. He also has a big position in Occidental Petroleum. I think that's someone to watch and to follow in this space.
John, thank you very much for jumping on the line here this afternoon and all this big news. That is John Kilduff, oil analyst at Again Capital, CNBC contributor, longtime contributor to this program. Thank you very, very much, John, for joining us live here this afternoon.
Thank you so much, man. Happy birthday.
Thank you. Thank you again very, very much. Positive start to the new week on Wall Street with the Dow up 32 today, the S&P 500 up 7, the NASDAQ up 32 points. Stay tuned now for UCLA basketball. It's going to be UCLA versus Michigan State at Michigan coming up here in just a few seconds. Live for you here on 790 KBC.
The UCLA women's basketball season is one you don't want to miss. Your top 10 Bruins are well on their way to another Final Four run. We need you to get to Pauley to support this incredible team. Led by Lauren Betts, Gabriella Jaquez, and Kiki Rice, newcomers Gianna Neepkins and Charlize Ledger-Walker. This group plays an exciting brand of basketball and wins. The time is now to come to see these stars in action. Big-time matchups are coming. Go to UCLABruins.com/tickets to secure your seats today. Can't wait to see you in Westwood cheering on the Bruins.